Gerald Lucas here with another installment of Ask Gerald, where you get your real estate questions answered. Today's question comes from Brendan, and Brendan writes from New Providence, New Jersey. Brendan writes, "We want to buy a home, but we've got massive student loans. Can we still qualify for a mortgage?" Well, that's a good question, Brendan. Yes, it is certainly possible to qualify for a mortgage with student loans. And the most important factor that lenders look at in determining whether you qualify for a mortgage loan is your DTI, or your debt to income ratio. And most lenders require that your debt to income ratio is less than 43%. It's difficult to know whether you would qualify for a mortgage or not without knowing your specific monthly gross income, or knowing the other debts that you have that would factor into your debt to income ratio. But one strategy you can use to increase the likelihood of getting approved for a mortgage is to reduce the other debts that you have, like credit cards, outside of your student loans. So you can lower your debt to income ratio either by increasing your monthly gross income, or by lowering your debts. And again, that will increase the likelihood of you qualifying. There are other factors that lenders look at. For example, how consistently you pay your bill and other debts. But really, debt to income ratio is probably the most important factor. But having student loans doesn't disqualify you, but the loans will count against you in terms of increasing your debt to income ratio. So thanks for your question, Brendan. For more real estate tips and information, visit my blog at geraldlucas.com. I'm Gerald Lucas, and I'll see you again soon.